Good morning, Valley of the Sun. Thank you for joining me, your host, Nathan Claiborne of the Phoenix Real Estate Roundup. Today is Tuesday, November 22nd. What a beautiful Tuesday it is, squarely in autumn. Nice chilly morning. Going to be a high of 73 today. Not that I'm a weatherman, but I just love this time of year. Who doesn't? This is why we live here, right? Today, the active listings on the Arizona Regional Multiple Listing Service, 19,914. And the average 30-year fixed-rate mortgage interest rate is 6.64%. That's way off the top of how interest rates. They shot up to 7.25%, and then they bounced off the top back to 6.64%, which is still a lot more than they were, but not over 7, and that's a good sign. Now, what that has done, interestingly. Last week, if you listen to my podcast, I start with the inventory number. And last week, there were 20,360 active listings last Tuesday morning. And then this week, there are 19,914. Interest rates went down and inventory went down. I'll let that sink in for just a minute. No, it just goes to show you that there is lots of latent demand in this market, and that the inventory problems that we've been seeing for the last really 5 or 6 years are not going away, and that fewer people are selling their homes, which is part of the problem, and not the problem, which is part of why inventory has gone down. But also, interest rates went down, and more people wanted to buy homes. Purchase mortgage applications went up. So there's like a lot. There's a bunch of mixed signals, and what we end up with, that's kind of the theme today, is mixed signals. We end up with a media environment that reacts relatively slowly to a market that is moving a lot faster than how fast that media environment is reacting. So we have lots of headlines, and the general zeitgeist in the market about how the housing market is doing is poor. People are not very confident, builders are not confident, et cetera, et cetera. But in all reality, people are still buying houses. I mean, it's less than it was a year ago, but a year ago we were setting records on number of houses sold, setting records, all-time historical records. Okay, now we're down, 34%, I think, from the height of it was a year ago in terms of units sold per month, year over year, and that's actually more normal. That's more normal. Selling 10,000 units a month, we didn't quite get to 10,000. It was more like 9,000, but either way, that's not normal. It's great when you're in the business, kind of. But there's obviously a lot more business available when interest rates are at 3.5% versus 6.5%. But we're seeing the inventory dip below 20,000 again. And to me, a balanced market in this marketplace would be 25 to 28,000. So when it's back under 20,000, that tells you that we're not looking at some kind of price crash. We're not, and we're going to see this level out and kind of bounce along lazily around where it is without any gains or without any significant gains or significant losses, probably for all of 2023. I think it's going to be a pretty flat year. Now, once a month, the MLS puts out what they call their stat and rent check, and it's just a quick worksheet of interesting tidbits, statistics, et cetera, et cetera. Now, I just mentioned monthly sales. So, for instance, last year, in the month of October, there were 8,385 sales in this market in October of 2021. And this year, there were 5,313 units sold. So that's a lot. That's a pretty big, significant drop, almost 40%, 36.6%. So the way that real estate agents look at it is if there were 5,300 units sold, that means that there were 10,600 paychecks, because every sale has two sides of it, the buyer and the seller side. So there were 10,600 paychecks in the Arizona Regional Multiple Listing Service, which has somewhere approximately around 40,000 real estate agents. So, but only 10,600 of them got paid in October. Whew. And that's why you're seeing, you know what's interesting? Phoenix Business Journal had an article last week about how the number of active listings was down. Well, the way that they measured that number is by measuring how many agents had a sale in the trailing 30 days. Well, it happens pretty often in this business for probably a majority of agents, myself included, where a month will go by that you don't have a closing. October for me was one of those months, so I count in that statistic. All of a sudden, I'm not an active real estate agent for the month of October, but then I closed 2 escrows at the beginning of November, and I'm active again. So that stat is a little bit misleading. But the fact that there were 10,600 paychecks that went out to the 40,000 real estate agents, that's enough of a stat to tell you what's going on out there. It's a dog-eat-dog world. So the median home price, this is important too. This is part of the mixed signals, right? Median home price last year, $418,000 in October of last year. This year, $438,000, which is a gain of almost 5%, 4.7% or 4.8%. So house prices have still gone up year over year, which is really a good sign, of course. There's 4.5 months worth of inventory right now. So those are the stats that we kind of pay attention to on a monthly basis to give us a little bit of a bellwether as to how this market is moving. But the big thing for me is the inventory figures and how quickly it reacted, inventory going down, how quickly that happened after interest rates went down. Interest rates went down about 60 basis points, 70 basis points, and inventory shot down under 20,000 again. I shouldn't say shot, but it's 5 or 6%. 400 listings fewer than there were last week out of the 20,000. What is that? That's 2%, I guess, 2.5%. So, but that's significant week over week. A 2.5% drop in inventory week over week that's not nothing. So it's an interesting trend, and that's why I talk about mixed signals. We have the media telling us that the housing market is on fire, builder confidence is at an all-time low, et cetera, et cetera. Consumer confidence at an all-time low, people's ability to afford a home at an all-time low. All of those things, but yet we still see this latent demand when the interest rates peak under 7%, kaboom, everyone jumps out and tries to buy a house again. So the housing market, the stories of the housing market's demise are greatly exaggerated. Another headline that came out today from CNBC, JP Morgan rated Toll Brothers as a buy and said that home builder stocks are undervalued right now. Or cheap is what they said. Builder stocks are cheap because they've taken a beating since the summer, since interest rates went up. And then again, interest rates popped down under 7%, and all of a sudden JP Morgan's bullish on the home builders. Well, there you go. As 30-year fixed rate mortgage interest rates go, so goes the housing market. And that is your Phoenix Real Estate Roundup, folks. Thank you so much for joining me. I will be here next week with more interesting tidbits from the Arizona Regional Multiple Listing Service and beyond. Thank you so much.